So let's start with the normal as usual. We start with our economic calendar for the day. We have retail sales later on today. So that's going to be 8:30 is the standard time, aka 3:30 my local time. So we have retail sales and we have unemployment claims as well. And then we also have the Philly Fed manufacturing index. So which is going to be having high impact news. The only problem I have with this high impact news for the day is that we have retail sales, right, and unemployment claims at the very same time. That is my problem. Retail sales and unemployment claims at the same time. So, however, how can I approach this? Let's go down to dollar index here, DXY, because we use DXY as the map of understanding. Okay, let me close that. Let's go back here. Okay, so what we have here is looking at DXY, dollar, aka the dollar index. We are on a daily chart, right? So let's look at this thing this way. Let's play up this chart here. So we have some clean charts. We all want some clean charts. So what do we see looking at this chart here? I'm going to base on this thing on the methods that I just told you guys. I've been telling you this method every single day because that's how we've been successfully being able to determine daily bias almost every single day. If you remember very well, our bias is daily bias is always on point. The same method. Simply look at this price action here. Looking at this daily chart. What we have in this case, I'm going to be different. In this case, we have this range low, up to a high, price back down into discount. Where do we have a discount here? We simply have this fair value gap here. That's going to be the first step, right? What we have in this case, internal range liquidity, tagged into it, rejected off this level. However, we close below this candle, but in this case, the fact that we have this huge rejection candle here, it indicates to us, okay, that today we simply have to expect what a bullish day. So which means on DXY, dollar index today, I am bullish. Just by simply looking at this thing. For those of you who want, you can also apply this premium and discount. I don't really care about this, by the way. This fair value gap here is a discount. Fair value gap, order block as well. They're expecting what price to check off where to this high here. However, our main drawn liquidity, you have to go back a bit high time frame to determine. Ooh, I love this price action, by the way, here. Remember this order block here? I said, okay, because price is already up close to, price already closed above the cost encroachment of this fair value gap here. We already closed above it. So I was expecting price to push right into this order blockages. And since I am heavily bullish up until this level, 114.77, so which means I am expecting price to disrespect what bearish PDRAs. So in this case, fair value gap, it must close above it. Order block, it must close above it. So for some of you, this will be the sell side of the curve, and now simply buying what the buy side of the curve as well on the other side. Ooh, easy, right? But how do we make money out of this? Because that's what we care about. How do we make money out of this? We break it down into this time frame. Oh, look at this thing here. Nasty and beautiful at the same time. Let's clean up this chart here. I'm going to clean up this and this and this. I don't want this. So what first thing we see, sell side liquidity. Boom, very nice. This was what? CPI yesterday, or maybe not. Yeah, CPI, do you know CPI? Actually, I had a perfect setup on CPI, guys, but I didn't get filled. It was a really nice setup. Didn't get filled. And then, ooh, I said, God damn, look at this thing here. What price is buy limit? Down into this, then it took off. Just like that, without me. But then it's part of the business, right? So from here on, sell side liquidity into what? Into high time frame PDRA. What do we have? High time frame PDRA. We have a fair value gap here. Where do we have this fair value gap? We have a fair value gap at discount from this range low up to a high. Discount array, liquidity grab, expecting what high prices were to this buy side liquidity here. Let's go down to hourly chart now. Ooh, look at this. Damn, and this is the thing of the beauty here. What do you see here? We grab liquidity to high time frame PDRA. We also have a fair value, order block as well on hourly chart. 2 PDRAs, as always. Like I always need to require minimum of 2 PDRAs whenever I'm checking a trade. But in this case, we don't check in a trade. Down into this lamp, liquidity up. Then we displace higher. The displacement to the upside, we broke above this high here. That will be our market structure shift on hourly chart, right? So which means now we have a new dealing range from this low up to the high. So which means we have this here premium and discount as well. If you want to go long, you always want to go long way at discount. So what do we have in this case, in this scenario? In this case, we obviously have this huge period, and this is going to be the change of delivery rate was above it. But so far, because I don't have buy above this levels, right? So let's try breaking it down into lower time frames, and maybe in a way that we can be able to take advantage of this move. So since we are here, what do we do from now on? We simply mark what the New York midnight opening price, or 12 o'clock candle here. This will be the opening price there, right? So how do I trade this thing? So if I'm bullish, I always want to go long way below the New York midnight open. So that means I want to go long below this level. So where is the Asian right now? Let's mark from what I'm from 6, which means the Asian sessions, this will be the low here. Okay. And this means that now during the London session, I have to be bearish because I am anticipating price to push lower and grab liquidity, at least the Asian lows, before it can push to the upside. So, and that tells me something else. What is it? This simply means to me, because it's going to be Asian low here, and this was, which means the Asian high here, the first thing, which means we're getting what? A double page. Price took off the Asian high first, then now it must take out what? The Asian low before it can move on into what? To its intended direction. So what does that mean to you? It simply means that in this time, this session, London session, you should be bearish, sell the dollar during London session, and should be grab liquidity until to this PDRA before we do what? Before we go higher. Now you have an idea what's going to happen now during this session. And now the next thing that you need to do is to know how to actually take advantage of it. So how do you take advantage of this thing? Let's go down 5 minutes chart now. We're breaking it down. What time is it now? It's 2:06. Let's remove this. So if you are Alvin right now, what you do, what goes through your mind? Let's keep it simple. We're on a 5 minutes chart here. Buy sell liquidity checking out here. Why am I marking this high and not this high on this side? Because this high here is simply time-based liquidity in the form of a Asian range. Check it out over there. Pushing low here. We don't have any good entry. Let me just go down 5 minutes chart here. I think I see something. Oh, very nice. What do you see here? Buy sell liquidity, high, low, high, with displaced lower. Break below this low here. Market shift. Oh, there was a very nice entry here, guys. Break strike here on a 5 minutes chart, right? Return back to the upside ratio into the breaker order block. In this case, 3 PDRAs. What are we looking for? We simply want to find some sort of fair value gap. Fair value gap entry there, targeting this low, which means if I was early in this case, if I was trading DXY, this was supposed to be my entry over there, stop loss over there, and check TP off on this level right here. But hey, we can't trade DXY, right? And there was another way. Look at this. Push the downside, break of structure, back into the fair value gap and order block. We checked into it. Then we check off the downside. So what does this mean to you? It simply means now you should be paying attention to what? To euro. What do you want to do in euro? You want to buy euro. How do you do that? We go back up into our time frame here. Daily chart. Look at this, guys. And once you see a lot of this in charts, it simply means we are always busy here. But I'm going to do this here. I don't want to delete everything there. USD. Let's use a different server, FXCM. In this case, remove all drawings. Good. Let's look at this Euro USD, right? Daily chart here. What do you see here? Look at this price action. Just by simply looking at this price action, what is your daily bias? Okay, you might say this, okay, we did talk about DXY, right? On DXY, we are bullish today. That will mean that we are bearish on USD. That's number one. Check, you are correct. What's next? How would you determine your daily bias? The second step is that you have to look in this way. Maybe let's put it this way, in forms of liquidity, internal liquidity to external, which means price, we have this high, down to low, external, back into internal, which means we should be headed down to external liquidity here. This will be our drawn liquidity, sell side liquidity here. And the good thing is that yesterday here, we have Wednesday. And you know this, the high or low of the week is usually formed when? On Wednesday, between Tuesday and Wednesday. So this means to me, there's a very good chance that this high here is actually what the high of the week. So, mark my favorite gap here. What else, Alvin? We have a drawn liquidity. In this case, this was mitigated. What's next? to the downside. Just by simply looking at this thing, in terms of liquidity, you have your bias already. What else do we use to determine our bias? Let's look at this candle. Let's zoom out here a bit. Check some notes if you do have a pen and paper. Look at these last three candles. As always, I always say the last three candles. We have this yesterday here was Wednesday. We have Tuesday here. Look at Wednesday and Tuesday. Wednesday actually pushed above Tuesday's high, but failed to close above it. I'm going to say it again. Wednesday pushed above Tuesday's high, but failed to close above it, indicating what? That today on Thursday, we should be expecting what? A bearish move. And look at these things that I talked about right now. They all indicate the same thing, that I should be doing what? I should be bearish today. So now, what do we do? The chart? No need for 4-hour chart, by the way. No need for it. Oh, look at this thing here. Just look at this price action here. Damn, very nice. I hope you can see what I see here. Let's go down to our chart. Maybe you can see it here. Do you see what I was talking about on the 4-hour chart here? You must see it, bro. Okay, let's look at this way again. What do we have? Just like we did on JXY. Look at this thing, price action, nasty price action. Not nasty. We have this high here. We mark this high now. Buy side liquidity. Swept. Right? And then after that, we displace to the downside, and we have what? Market structure shift. Broke below the slope. After break below slope, which means what? It means what? We have a breaker here, we have an order block here, and we have what? A fair value gap here as well. So what does it mean? Let's look at this. Where is our midnight opening price? New York. This will be the candle right here. We opened higher and closed lower, which means this was a bearish candle over there. And now price is trading above, but it is actually trading above the midnight opening price, which means to me, it simply what means what? It simply means that price is now actually what? A premium. What do you mean, Alvin? So let's look at the Asian range here as well. I'm going to mark from 6 p.m. here. We have Asian high here, which means we have time-based liquidity. I know where the market now is headed down to now during the London session. I know where it is headed up to here on EURUSD. The only thing that's left now is actually finding a way of taking advantage of it. What do you mean, Alvin? I mean this. The Asian lows has been taken out, obviously. Now head up to the highs. So which means I can do this now. But if you miss time trade, side liquidity Asian session low has been taken out. Let's go down 5 minutes chart here. And this is exactly the same thing that we saw what on GXY. Where is the market headed up to? It is actually headed up to this time-based liquidity. Imagine coming in every single day, you know where price action is headed up to. The only thing that you need to figure out is the timing and actually know when to place that position and how as well. So you mark this as a side liquidity. We have a low, a high, lower low, a high over there, a lower high, boom to the upside over a high there. You can consider this a pretty good structure, but for me, I want to mark the cleanest one. I'm going to mark this high. Why this high here? Because this high's high is lower than this candle's high, and it's higher than this candle's high, and as well as this candle's high, making this candle here a very significant high here. This will be what? Market structure shift over there. So after market structure shift, price head back to the downside. Where to the downside? Look at this down close candles, right? To this bullish order block here. What do we have within this bullish order block? We also have what? Oh, not a clean breaker. We also have what? A fair value gap here. Within this fair value gap, the body tells the story, and what? The wicks do what? Do the damage. Look at this bodies. Look at the wicks. Push lower. Then boom to the upside. Where to? Asian session side, or drawn liquidity now, which means if all these pairs, they simply do the same things over and over again each and every single day. Your job is simply knowing when to take advantage of it. It's 2 o'clock currently. I'm not in the study anyway. So which means this here could have been a good entry. And then from here on, it took off to the upside again. Look at this price again. Came back down into what? Down to this fair value gap here. Fair value gap and order block, then boom to the upside over there. Where to? Time-based liquidity. Asian sessions high. We also have what? This hourly fair value gap here. Where is it? Where's the hourly fair value gap? This hourly fair value gap. London session, I want to see London session pushing higher at least to this hourly fair value gap here. So which means from here on, which means I'll be expecting to do price action to this. Then why like this? Because we are the AMD traders. It simply means that what we get here, we have the accumulation phase. We're looking for the manipulation phase now, which is within the London session, and we want to do what? Trade, go short, what? The distribution phase. And look at this thing here. You haven't seen me applying the quarterly theory anymore in a very, very long time. But whenever I do here, it still goes back to it applies it each and every single day. And guys, I have so many, like lately, I'm sure most of you have seen the trades I've been checking lately. It's kind of like, they're kind of, what do I say? I don't mean to break anything like that, but let me just shut up, by the way. Yeah. So, which means now in this case, on EURUSD, we're expecting price to push out to this fair value gap. Then from this fair value, hourly fair value gap, we'll be looking for a reversal here towards the end of the London session, or from around 3:30. Again, around 3:30, I'll be expecting what, some sort of a reversal here during the London session silver bullet. I will be expecting what, a reversal around this area, and expecting that this thing will push toward the downside, possibly down into what, to our main drawn liquidity. Where is our main drawn liquidity? Go back to daily chart. It happens to be what? It happens to be this low here. What else you see? Someone else may say, okay, but we have the buy side of the curve now, which means we are expecting what to sell the sell side of the curve. Market maker sell model. But this thing, regardless of how we check it, it always goes back to the very same thing, the same principles over and over. You simply pick a model, use it, and see how you can take advantage of it. And I also want to show you something, two things I want to show you as well. The same way that we are able to determine the daily bias, I want us to use the very same method to determine the 4-hour bias as well as the hourly bias. And how do we do that? Let's go back here. Let me just show you something quickly. Let's go back to this. Let's go back to Euro here. Where was CPI? Yes, this was it CPI? Yes. Let's go back down. Let's look at these candlesticks here. Let's remove this and this as well. Before this hourly candle here, that I missed that order, right? What we had this candle here. This was simply the 7 o'clock candle. And news were what at 8:30, right? Look at the 7 o'clock candle here. What happened to 7 o'clock candle? The 7 o'clock candle, it pushed below what the 6 o'clock candle here. It pushed below it, but actually failed to close below it. It pushed but failed to close below it, indicating what to you that the next candle most likely gonna be what? Gonna be bullish. So if not bullish, it should push at least to what? To the previous candle's high here. Ooh. How do you do that? So if maybe you know, there are those guys that can now look at this simply by telling me, by determining this candle and this candle here, you are able to tell something. For those of you now who are for what do we call guys, this called search here, stuff like that. You also have this candle here, and this candle here tells you what? This one candle within this range, expect one higher prices. It's the same thing, right? So which means simply by telling this candle here, which means now you can frame a trade setup on lower time frames, anticipating what? A bullish hour, which is going to be the 8 o'clock, 8 to 9 o'clock candle. You go down to from hourly chart, go down to 5 minutes chart now. What are you looking for on 5 minutes chart? This is what I was looking for on 5 minutes chart. Pen and paper if you have it. What do you see on the 5 minutes chart here? This was simply, let's mark this thing here. This was simply before the 8 o'clock candle, 8 and right there. Right over there. I didn't drop a line here. Right, 8 o'clock candle over there. Let's make this a bit line bit bigger. I know I'm supposed to be doing analysis, guys, but I love dropping some few gems here. Let's look at this price action here. Before that 8 o'clock candle, what do we have here? Low, the high, sideways price action. Look at this. This move here did what? Checking out what? Sell side liquidity here. And that hourly chart closes below, above the previous hourly candle here. That's the closing price. Down into this thing, in this case, this week here, you don't cap on it. So look at this thing. So now I have an idea that on the next hour candle is supposed to be So now how do I actually take advantage of it? Look how beautiful this price action is there. Let's go down to 1 minute chart now. You don't have to go down to 1 minute chart, but I'm going to go down to 1 minute chart anyway. Where was this? Okay. Okay, I'm still on the right track here. Let's look at this hourly chart on 1 minute chart now. What do you see? Look at this. In this thing of a beauty. Now you already in mind, you know that this CPI we are bullish into upside. So now you're simply looking to take a way of taking advantage of that move. So how do you do that, Alvain? This is how you do it. Ooh. What do you see here? We have this low, so you can check it out, right? We push high, hello, high, hello, high, then boom. Look at this move here and look where exactly is this move, the start of this candle. So which means now you have an idea that on the hourly candle, right, it's going to be bullish. So if the hourly candle is bullish, what do you expect? You still don't expect one of accumulation of the candle. Once you have the accumulation, you will not get the manipulation. So if you are bullish, you want to set manipulating lower, so you can do it. So you can trade that distribution. What is happening here? The order flow candle open right here. Did what? Sideways accumulation. Sorry, my bad. It was accumulation. There was a manipulation here. And look at this manipulation. After the manipulation, then it started distributing. Look at this beautiful lower here, this low. Checking out this lows and this low here. This was simply what? Sell side liquidity on 1 minute chart. Down into what? Down into bullish order block. Right? We mark this bullish order block here. Then from here on, price displays broke above this high here. And this is a thing of a beauty. Displays above this high. This was a very clean market structure shift over here. So which means we have this high. So what are these candles? This uptrend candle. I'm going to mark this uptrend candle as what? Bullish breaker here. Extend it to the right. Right there. You have your breaker. Down close candle. Bullish order block. Over there. Then price. Check it to order block and breaker here. CPI. Came in CPI. Took off to the upside. Where was the key into this? The key here was simply being able to determine the hourly candle, bias of that hourly candle. Once you have an idea what this hour is going to do, so now you're trying to find a way of how to take advantage of it. It's a PD of my own, because I say limit. Normally, I don't use limited orders, but because I knew we have new, so I preferred using limit orders. I didn't get filled in here. Price simply dropped down to my entry, then pushed out without filling me in. And you can apply the same thing. This is the exact same method that we use to tell what our daily pass. But now I am scaling it down into what? Into hourly candle. Because why? I am a day trader. I don't really care about the entire day's move. I do care what's going to happen in the next hour. I do care about the 4-hour candle as well. Simple method. Use it to your advantage. So now what? We're here on the dollar. So not the dollar, but euro. Oh, sorry, it was on this pair, euro USD. I was using FXCM server here. Use the same method here to tell this bias. Expecting price to push out down to up to this level. So which means, in this case, during this hour, in this case, I will be expecting what? Some sort of reversal candles. Then I'll be doing what? Expecting lower prices from there on. Simplest way. Accumulation, manipulation, and distribution. So once you know what's the next candle gonna do, you wanna find its opening price. If you are bearish, you want to see the price manipulating higher above the opening price. If you are bullish, you wanna see price manipulating below the opening price, and take advantage of it just like that. So this is gonna be our euro. Let's go down to pound. Look at this thing here. And based on what we just talked about, just by opening this chart, I believe there's something that you can see that is so clear, should be so clear to you. But then let's break down daily chart. I know today, guys, I'm supposed to be sticking to analysis, but then you know I love sharing what I know, by the way. Okay, well, let me see if I'm not deleting. Man, this thing, what's going on here? This simply means that I'm always on my charts, always doing something. But okay, let's go down up to daily chart here. I want to go through this quickly here. We've taken out this low here. However, our main drawn liquidity on GBP USD, we still have that 2037 level long-term price still down to this level 2037. That's going to be our main drawn liquidity on this GBP, which means we are heavily bearish on weekly chart. So let's go down to daily chart here. What do we have? Oh, ain't this little thing of a beauty here? Okay, let's break it down. There are a few ways to break this thing down. What we know already, we know we are headed to a downside on weekly chart, right? So now we're daily chart. There are two things to pay attention to here. Two things to pay attention to. The first one is that we took out what external range liquidity below store, which means we'll be returning back up into internal range liquidity, aka fair value gap, aka imbalance, aka what the CB, sell imbalance by sell efficiency, tagged into it right here. And look at this here. The body tells the story and the wicks do the damage. Good. We don't need that. Okay. So that's going to be the first step. And also this one is actions that we should be bearish for the day. Number one, we have drawn liquidity to the downside. We have what? Internal range liquidity indicating next move to the downside. What's next, Alvin? So the next move is simply be the same way what we just talked about when looking at USD. We're looking at the candlesticks. Now let's look at the last three candles. Last two actually. Let's look at this. It was Wednesday here. This was Tuesday. We look at Wednesday here. Wednesday actually pushed above Tuesday's high, but failed to close above it, indicating that today on Thursday, we should be expecting what? A bearish day. Sure. Let me say that again. Let me say it again. Wednesday pushed above Tuesday's high, but failed to close above it, indicating that today on Thursday, we should be expecting a bearish move. All those three that I use to tell the buyers all suggest that what I should be bearish today on JU. And this guy is the exact same that I've been using over and over again to tell the daily buyers. I believe most of you know now that we've been successful in nailing buyers over and over again, simply using by this simplest methods ever. So now how do you tell, you know what? And one thing that you love that if I'm bearish, I always want to see what, just like I said on our account, right? If I am bearish, I want to see price doing what? Moving against me. This will be the manipulation of the day. So I can trade what the distribution to downside. What happened here? We are bearish, right? Price opened here. It pushed higher as a manipulation. So, okay, we're a bit late here. Let's see if we can break down lower time frame. Yes. I think we started already to downside euro. Let's go down to for 4 hour chart, daily chart. 4 hour chart, we don't really need the 4 hour chart. We still need. Oh, hope you can see this. Let's break it down here. We have this candle high, low, high, back up into this order bearish order block here on a 4 hour chart. Right, we've taken out this high as well. This is going to be a buy side liquidity. There, we're done. Let's go down to hourly chart now. What do you see, Alvin? A high, hello, a high, hello, high over there, up to what? To this bearish order block here on hourly chart. What else do you see? One may say, okay, I see this premium discount. I don't really care about this, by the way. Obviously, trading at a premium. What else do you see? For me, premium discount is this. We have the midnight opening price here, right there, 12 o'clock, midnight, New York. We have what? We have the opening price over there. So which means once I have this, to me, and if price is trading below the midnight opening price, I consider as what? As discount. Above it, it's premium. Simply flip the script now. What do you do? Today we are bearish. What else today? Where's the Asian range? It's right here. Asian lows has been checked out. And here on GU, I don't think GU will check out the Asian highs. So which means here I am expecting already what? SMT with what? I'm expecting SMT with AU. So if I'm expecting SMT with AU, it simply means what? GU is the weakest. If GU is the weakest, which means if I get a setup on USD, I'm most likely going to pay attention to GBPUSD because GBPUSD is the weakest and it's the one that's going to be provided with some very good entries. So let's break it down. Let's put in some proper lipsticks. Buy side liquidity here into high time frame order block. Displacement to the downside here. We broke below this here. Market star shift. Price back to the upside in this case. I don't think this highway won't be taken out on GU. I'm not anticipating price to check out the size, so I'm expecting some sort of SMT here. So you can push lower. So what does that mean to me? It simply means I can go down to 15 minutes charger and start filling up energy. How? If I'm expecting SMT, which means look at PDRAs in this case. We have this low, high, lower, low, in this case, low down here, which means we can have what some sort of fair value gap here. I simply want to see price pushing to internal range liquidity, in this case, fair value gap before pushes lower. Then I'm going to get a trade setup just like that. So now it's simply a matter of waiting. And when am I going to take this trade? There's a good chance I'm going to take this trade between 3 and 4. Ooh. Isn't 3 and 4 the silver play time? Yes, it is. And look at this whole thing here. Regardless of the model that you're picking at, it always leads back into the same thing over and over again. And this is how we simplify trading. Anyway, guys, I recently, last night, I purchased an account on, what's this? On QuantTechL. Yes, I took a 50K account. I had to pay about $170. Is it 170? Yes, $170 because there's already discount. Is there affordable? I took a 50K account on them because I don't have much experience with them. So I just saw that, okay, they're cheaper. I said, well, you know what? Let me just buy this account. I took it last night. I'm going to start trading it shortly, possibly today or tomorrow. Recently, I'm trading that IC funded account, the 500K one. Yeah. And I also have one that I haven't started trading, which is from the funding traders that didn't start trading it yet. The reason being, those platforms, they don't offer MT5 on that. So which means it was a mistake for me in buying it. So what I'm trying to do now, I'm trying to learn how to use TradeLocker in so many ways before I can even jump into that account, okay? Yeah, personal account. So this gonna is mine, so which means I have to do this thing on my own. So that's what I'm trying to do now. So, but at all, which means if I get past the challenge, if I pass that IC funded account, I pass the funding traders account, which means now that will be 12.1M in funding, and again, which means the plus the FCHM account plus the one that I have, which means total, I'll be funded with 1.5. If I pass, 1.550. Damn, it's a lot. If I pass all of these current challenges. So yeah, but guys, I've been telling you over again that this year we reached 2 million in funding by December 2025. So it's a lot of work, guys. It's a lot of work. I really hope just we all do the same thing. Yeah, you can join me in my journey. Do the same. Go to programs, buy these accounts from time to time over and over. And it doesn't necessarily matter if you fail or not. Because one thing I've realized is that the only thing I can show you guys everything I know. I can show you everything I know. But the only thing that will make you a profitable trader is actually you doing the things each and every thing. You showing up each and every single day. It's going to be you putting in the work. How much time do you spend on your charts daily? Let's look at Aussie now. And guys, today I took a bit too much. I don't know why. Okay, I'm going to skip this Aussie here. I'm going to skip Aussie today. Let's look at Kiwi. Oh, shit. Do you see what I see here? Look at this candle yesterday here. We push above it, close below. But we look at Aussie here. Actually, I closed above this candle side here. Aussie suggests a bullish day. However, this week here, rejection over there. But Kiwi suggests that we're heading to a downside here. I'm going to stay away from these two pairs today. Let's look at the indices. Let's go to Dow today. Okay, here's Dow today, right? Look at this. Man, I had a beautiful setup here. We look at Dow here today. I am bullish. Simply by looking at yesterday candle here, open, close above, chooses high, displacement above it, which means today suggests what a bullish day. However, I don't like the fact that if I'm bullish, my drawn liquidity has to be the previous day's high, and we are so close to it. Ooh. So what do you do if you're so close to it? I simply skip it to Nasdaq. Same thing here, bullish. And I don't like this whenever, if I'm bullish, right? I'm bullish and price opens and simply pushing straight to downside. So which means in this case, you simply have to use what? You simply have to use what? A continuation model, which means you're waiting for a retracement back into the range, then buy like that. That's how simple. So guys, okay, we've been here for 30 minutes now. We'll be taking a short break, a 30 minutes break. Then I will come back exactly at, that will be at 3 o'clock. That will be strictly with the private group, will be our day trading session. But for now, guys, I am out. See you on the next one. Cheers.